Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. I said 2 weeks ago, and I quote, "Bit of movement this past week, but it seems to have shot its bolt, so to speak," end of quote. Well, we did indeed see a bit of upward movement 3 weeks ago, with prices pushing up over the combination of the declining short-medium moving average above, currently at 22,190, and the bright red upper tine, currently at 21,580, of the February to April bearish shift pitchfork. The market's timing was lousy. It would have been better to try a week later when these two had separated and thus individually were weakened than when they were combined and thus stronger. Despite breaking through both, so much energy had been used in pushing higher that all that could be achieved was an indecisive doji cross 3 Fridays ago, right at the top of the market. 2 weeks ago, we saw the start of a falling away lower, down through the combination and down through the February 2014 high at 22,155 and the May 2014 high at 21,610. Prices last week pushed even lower, below all the congestion that we saw over May and early June, based around the key 21,000 level, and down to the September 2022 low at 20,045, where we have held. 2 weeks ago, I said I'd taken a fresh look at the action since early May, and I eventually highlighted a possibility here. I pointed out that we might have a descending scallop pattern. Initially, I thought it had elements of a descending scallop pattern, but as I said back then, I quote, "Looks like a ski jumping profile, and the market can choose to shoot higher or fall back to the congestion around 21,000. I suspect that may be where we might look right now. It also suggests that the 21,000 zone will see the market break lower, but let's see what it does in trying to get down there first." End of quote. Well, 2 Fridays ago, prices reached the 21,000 level, and then on Monday last week, prices exceeded it on the downside, such that apart from the September 2022 low down at 20,050, we have little away until the middle tine, which is currently at 18,945 of the bearish shift pitchfork. So far, the September 2022 low has held, but the upper tine of the bearish shift pitchfork, currently at 21,610, is bearing down upon the market, pressuring the opportunities on the upside. Looking below the middle tine again, we do have support and is a lot closer than it was last week. We have congestion between 17,815 to 18,850, consisting of the August 2019 high at 18,850, the June 21 high at 18,110, the important July 2022 low down at 18,230, and the October 2019 high at 17,815. Thus, it seemed reasonable last week to indicate some potential targets below for such a descending scallop pattern that breaks on the downside. Okay, so a primary target X below would be in the 18,900 zone, for harder to reach secondary target down in the 15,800 zone. This is only the start, so these may be finessed further or even retired depending on the circumstances. LME 3-month zinc. There's not really much in price movements report from last week here, though there are some interesting patterns that may soon be retired. 3 weeks ago, we saw the market start a small reactionary move higher that pushed up through the upper bear channel and significant 2023 downtrend, currently at 2303, highlighted in dark blue on my daily chart. Whilst this was very interesting, in truth, all the market managed to do was rise up to the next overhead small congestion at 2497, plus the lesser Fibonacci line at 2509, and then turn back down again, with a resounding combination of a bearish dark cloud cover pattern and bearish double. Prices 2 weeks ago followed down along the breached downtrend, using it as a declining attractor, such that we were back to where we started from. However, this week, though the market just went sideways, roughly between 2350 to 2400, by doing just that, it edged away from the downtrend, ceasing to use it as an attractor and thus threatening the whole idea of the bear channel. Last week, this opened up the question which so far may have one of three answers as to whether we have in the May to date action a possible bearish halfway hesitation, or a possible bearish descending scallop pattern, or finally a possible double bottoming construction. I'm not sure on any of these as yet, though with having just finished my nickel commentary, I confess to a slight preference for the descending scallop pattern. However, it's still too early on any of these. Again, as yet. Overall, we are still within the purple May to August 2022 bearish shift pitchfork, in between the overhead purple middle tine, currently at 2560, and the lower tine below, currently at 2024. To add to this, I have over many weeks spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern. This is now way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long dated and wide pattern. The primary outlandish target for such a pattern was in the 2545 zone. This was achieved 6 weeks ago. 3 weeks ago, I laid out the potential secondary target X1. This was for a far harder to reach target, and it would be quite a way lower, down in the 1345 zone. This is one definitely to put in the back of your diary and only look at occasionally. In the meantime, looking below, we have more immediate support from the October 2020 low at 2282, which had been breached at the turn of May into June. But there is an argument it barely had a second consecutive close below it, and we therefore might consider it breached rather than broken. This ties in with the penetration and breach 6 weeks ago of the lower bear channel line. It wasn't enough to verify it. And then 4 weeks ago I asked another question, and one that was still open last week, as to whether the moves against the bear channel were just a tickle or perhaps the first of a number of attempts to break it. Back then it did not look so, but now I'm minded to think that these attempts at both the lower and now the upper and now the lower bear channel trend lines really mean the lifespan of this bear channel is coming to an end. I am fully expecting to downgrade this bear channel next time.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.